And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. Happy Friday, everyone. Capital Preservation Friday, November the 18th. My name is John Hoagland. As always, I appreciate you trusting me with your time. We're focused on context, risk management, and patience always. This morning, we've got a couple of kind of minor economic numbers due out, not until 9 o'clock Central after the equities open. Existing home sales due out at 9 o'clock. One that has never been on the radar, but I just kind of threw it on here. E-commerce retail sales. Some of the strength in equities, a lot of economists are kind of putting on some of the strong retail earnings that we've seen for the last couple of days. And then, of course, we also have misleading indicators, all of those out at 9 a.m. Central. So looking at the markets this morning, kind of like, wow, I guess resilience abounds here in U.S. equity futures. Again, economists are citing some good retail earnings for the current strength, or at least part of the current strength. We've got Gap, Macy's, Kohl's, Foot Locker among the most recent good retail sales, but it's not necessarily all good news, as Amazon is still intending layoffs of about 10,000 workers into next year. Crude prices remain under pressure as China sees COVID cases rapidly growing again. In whatever ECB President Lagarde said last night at 2:30, right about the London Open, seems to have had quite an effect on a lot of these markets. We're going to see this on the 30-minute charts today, where a lot of markets really took to directional activity at 2 o'clock in the morning, 2 o'clock, 2:30, which is when President Lagarde was speaking. I know that there were a couple other speakers over in Europe, but it was really that 2 o'clock number, 2 o'clock, 2:30 number, when things started to really kind of jump a little bit, and even in our equities here in the U.S. I mean, the volume is never very good at that time, but it looks like it was pretty good volume, but We'll check that out in the charts. The VIX is down about 2% today, down at 23.48. Very low VIX. Dollar index off a little bit this morning. Last I checked, it was 106.50. Yield on the 10-year is up slightly at 3.76, 3.79, kind of wavering in that area. And again, that's just up a little bit from the close from yesterday. As always, we ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love. We're always welcome here on the Market Forecast Recap. Everything we do here is for you. Subscribe to our YouTube channel. You get notified when we do go live, and I'm looking forward to an interesting early trading day today. As usual, my goal is to try not to trade, and if I do trade, I'm going to try and make a little bit of money, and then I may call it an early end of the day. And one of the things we always used to say in the trading pits was, if you're still in the pit at 2 o'clock on Friday, you're probably down money, and nobody wants that for any of you, me, anybody really. But we can't choose that. We just got to trade what we see, manage our risk, and preserve capital on Friday. Nasdaq first in the room this morning. You win the prize. Shaw Cunningham, good to see you. Caprice Theo. Scott saw and he conquered. Dimitar, Fred, good morning. Yeah, it was a couple of things down there that we could really have leaned on, including the naked point of control that we tested right on the open, right at the overnight low. There were a couple of decent opportunities when we filled the gap and we got up near the bottom, near the kind of high end of the zone that I was looking at as the low end of the balance that we broke out of that night. There was another pretty decent opportunity on that trade as well. So We did have a couple of losses in Make Hold Money, but I did manage to make most of them back after the session was over. Scarlet Arachnid, good morning. George. Lacey is on her new little bed here. We discovered she doesn't like it's leather like around the sides. She doesn't like that. If we cover it with a blanket, she loves to go in there. She's in there right now, sawing logs. Scarlet Arachnid, good morning. Serenity Trader, good morning. Caesar the Rooster, crowing already. I'll say, let's have a great capital preservation day. Sounds like a good idea to me, Rooster. Bill Phillips, Charles March, Haggle Matters, good morning. Sonny with a really good quote. I like this quote, Sonny. I was checking it out before the forecast here. Great minds discuss ideas. Average minds discuss events. Small minds discuss people. Eleanor Roosevelt. Really good quote. Thank you for that, Sonny. Vince, George Duquet, good morning. Danny Ireland, a balmy -5 degrees this morning up in the Tetons. Wow. This is going to feel a whole lot colder in Lambeau this morning. Yes. Sarah Hall, good morning, prayers, love, and a happy Friday dance to you as well. Steve Carlson, good morning, happy Friday. Looking forward to smoking some barbecued ribs this weekend. Man, that sounds good. Unfortunately, it's like 15 degrees out here in Chicago right now, I think. I'm sorry, 24 it says on my computer, but light snow. Speaking of snow, man, if you're in upstate New York this weekend, I hope you're prepared. You're going to be getting some really serious and deep snow. Hope you got plenty of food and water and everything that you're going to need. And remember, if you're not in condition to be shoveling 5 feet of snow, don't shovel 5 feet of snow. Get some help. D.A. Dowitzer, Terry King, Besweed, good morning. I haven't seen you for a while. Kaylin Price, there's, I think, a new name. Thanks for saying good morning this morning. Joel, good morning. Friday seems to often be directional. Looking at weekly charts, many of the weekly moves mostly Friday moves. Yes, and there's another kind of adage we used to say in the trading pit is never sell the Friday rally. You know, in the equities, we haven't really had much directional movement in the last week. So I'm not looking for any inventory adjustments. I'm not looking for any long or short liquidations or covering at the end of the day today. So if we do end up really kind of going directional to the upside, I'm not going to fight that here on a Friday. It's a really good comment there, Besweed. Really appreciate that. Ricardo, Olaf, good morning. Orion, Jason, Adrian, good morning. And sometimes I'm really bad with these names, but thank you for saying good morning and happy Friday. Diggable Seeker, good morning. Tyler, Serenity Trader, that darn global warming, right? Dear Packers, can we please get some receivers who can actually receive? JD Royalty, you may get some comments from our good friend Fred Decker on that. Fred Decker is a huge Packer fan and likes to wave the Packers around when they win, but he's also pretty good to kind of mention when they don't do so well. So he just likes to have the Packers beat the Bears quite a bit. Good morning, Joe. My hypothetical this morning is we test call wall and a POC from composite profile from 11:10 after a responsive trade lower to correct overnight longs, trend day higher, but open-minded. I think that's a really kind of an interesting idea. We have a naked point of control from 2 days ago that we may have the opportunity to go down and test relatively early today. We do have some overnight longs. We're going to check that on the charts here. Is that a blue boomerang behind me? No. Stephen, Matt, JM. I put this up here to remind me to stay humble. That is a hood scoop from a 1966 Pontiac GTO. Now, there's a story behind that, and maybe at the end of the forecast today, I will go through that story. But it's one of the many bungles I've made in my life. And we can talk about that at the end of the forecast, perhaps, because I'd like to get into the charts and see kind of what we are prepping for in our trading today. And we will see what we've got. And it's good to see everybody this morning. Again, happy Friday. Be prepared for the weather and to be prepared for the trading day. That's what we're doing here. And let's jump into the charts. JDI, you always notice, well, this thing right here, this little patch here, it says Chicago Grain. That was a clearing firm on the Chicago Mercantile Exchange and the Board of Trade. A friend of my dad's owned it, and it's one of the places that I worked when I was kind of coming up in the industry. Ended up getting bought out by a company called Refco, but the patch remains. Let's jump into the charts, and then maybe we'll talk about my GTO story at the end of the forecast here. So, this is the 30-minute for the S&Ps here. Let's get to the daily. So we had an opportunity for a continuation move to the downside off of this area of balance up here yesterday. Volume cut off on this day to the downside yesterday, and it also did not bring new business. As a matter of fact, on the preliminary, the guess from the exchange, open interest, dropped by about 1,400 contracts. Well, that's not really good for the beginning of a new leg to the downside. As a matter of fact, the market really did kind of recover relatively nicely and kind of closed inside the zone. Let me get my other papers here. Inside the zone that we talked about yesterday as the kind of low end of the range that we broke out of to the downside. Now, 39.51 to 39.61. 39.51 to 61 was that area where we were kind of looking at this market as breaking out below that level, and it closed in that zone. So it was a pretty good close yesterday. The lack of volume and the lack of adding to the open interest, to me, is like, that's not a good way to start a new leg. So it makes sense to me that the market has kind of recovered whatever it was last night. Here, let's get through this. So we're back inside balance, excess rejection of price below, at least for now. I mean, this is a pretty deep stab to the downside that really showed a lot of signs of rejection. We see a lot of excess in the daily chart here. I mean, this is excess that we've been talking about since it was put in. This is a pretty good degree of excess below a failed acceptance, below an area of balance. These markets are so resilient, and as long as there's no new bad news, they just have this tendency to grind shorts to the upside. Here's the day yesterday. So, yep, Fred was talking about make whole money. We were, thinking about taking a long near the overnight low, and we had tested this naked point of control. Now, there was a question a couple of 3 weeks ago about is a naked point of control a good target or a good entry? Well, in this case, it was a good target and a good entry. The market eventually came all the way back up, closed the gap, what got to the high of the zone, the 51 to 61, then turned and then came all the way back down past the VWAP. I mean, this was a pretty decent pullback off that high, and then ended up closing relatively well inside that zone, 39.51 to 39.61, after kind of rejecting price down there. So the market opens last night. It kind of drifts into value. There's no real important things going on here. And at 2 o'clock, 2:30, the market starts to move higher. Whatever it was that the ECB president said last night, I mean, whatever it was, it had an effect on a lot of these markets. And we're going to see that 230 bar change directions in a lot of these markets this morning. So now we've got the market firmly back inside this area of balance. We've got overnight inventory to the long side. This is what Joe D was talking about. He's looking for an opportunity to look for a long on an inventory adjustment, which would be to the opposite direction of where it currently is, and then see the market continue to move higher throughout the rest of the session. I completely agree that that is a very valid and one of the top hypotheses that I was thinking about looking for this morning. So we're back to looking for opportunities to look for longs on weaknesses. The open interest yesterday was so small, it seems as though this market is falling into short time frame control. We are in balance. Short time frame control. Really love to see an opportunity for this market to come back. I mean, we've got a gap. If we can come back and we close the gap, look what we did yesterday. We had overnight shorts. We came back, closed the gap, and then the market turned. We come down here, check this point of control, maybe even close the gap. Don't find acceptance here. That may be a good launching point for a continuation to the upside, as Joe D has mentioned. All right, so open interest yesterday, moot. Inert. Volume, a little low. Even in New York. Okay, yesterday's volume was 3% less than the previous day. So think about that. Okay, this day had more volume than this day. We did not attract new business down here. That's why we're rejecting it. So now we look for where the market is going to be viewed as too expensive, where buyers won't buy it anymore and sellers take over. But I don't think we're there yet. Looking for an adjustment and an opportunity to see this market continue this move to the upside. So resilient. Without bad news, man, these markets are they just keep going. Let's take a look at crude oil now. Well, we had a pretty decent move on crude oil, and look at this. My goodness, this is crazy. Volume was relatively blurry yesterday because of rollover. This was the first day we were trading the January contract. Overall, we added 15,000 in open interest yesterday. That's an estimate. The December contract, which is the expiring contract, lost 40,000 contracts. So in the nearby contracts, we technically added 55,000 new contracts on this push to the downside. Volume, I'm sure, was pretty good, but again, it's blurry because it's split between the two front months mostly. So we looked at this head and shoulders here. We looked at this M formation, which usually is a reversal. We have the head and shoulders here, which is a reversal. And we're looking at a target of $75. Close to $75 for the head and shoulders to finish its measured move. How do you measure a head and shoulders move? Well, you look at the neckline, and you look at the top of the head. You take that measurement from the top of the head, right here, to the neckline. Then you extend that same distance from the neckline lower, and that's where you get your target, right just above $75. So looking more and more like that's a pretty high probability. And now, again, we've got China with high COVID, probably less demand for crude oil. And now we're hearing that the relations between Saudi Arabia and the U.S. may be softening. So there's all kinds of fundamental things pointing price lower, and overall the technicals have that move down to $75 a barrel. Wouldn't be such a bad thing, would it? I don't know how long it's going to take for that to make any effect on the gasoline at the pump, but at least we've got this going for us. Take a look. 30. When did this start? Here's 2 o'clock. 4 o'clock, we started this route to the downside. We've got overnight inventory to the short. We've got gap rules. We've got all of those things that are going to kind of affect our decision here early in the session. We are out of balance. We are out of whack. $75. It's not that far away. Ooh, boy, it would be something to see that happen today. Did we open with the opening range trade? Looks like we did. It's 32 ticks, opening range, the high of the session. As long as that remains the high of the session, it has me looking for opportunities to sell strengths. It's been hanging in here quite a bit. It's looking for direction. It's going to be an interesting trading day here in crude oil, isn't it? NASDAQ, similar but different to the S&Ps, right? Open interest, we had a pretty decent decrease. We lost just over 11,000 in open interest on this move to the downside. Volume was actually a little higher in the NASDAQ. Was this long liquidation yesterday? Did we just get out of a whole bunch of longs? And by the way, long liquidation does take selling power out of the marketplace. It takes initiative selling out of the marketplace. Maybe we got some longs that just got a little bit nervous and are going to have to come back into the market as buyers. Now, there's not as much a clear high and low of the area of balance that's being created here in the NASDAQ as much as in the S&Ps. The extremes are much less defined. I'm looking at 11,543, right about here, this low here. And I'm looking at 11,898 up here, just short of 11,900 as the extremes of the area of balance. But when you look at the 30-minute chart, we've got 2 highs here. We've got 2 lows here. We've got a low here. The NASDAQ didn't go as deep as the S&Ps did to check this naked point of control, but it also seems to have rejected price below an assumed area of balance here. And we had a channel to the upside here that we broke out and just kind of hung around. Now we get the break to the downside and some recovery, and now we're back in the area of balance. But again, it's a less defined area of balance. I'm kind of looking at the 11,898 as these highs here. $11,500. These lows here is the extreme. So we're pretty far away from them. We do have overnight inventory to the long side. We do have gap rules. Well, it looks like we've gone past this naked point of control. We have this point of control. We have yesterday's point of control to look for opportunities. And again, with that loss in open interest, there's the possibility that those longs that got out yesterday may need to get back into the market. Look for opportunities on overnight inventory adjustments to look for longs. And, in this area here, it's looking more like we're falling into short time frame control, even with that big drop in open interest yesterday. Gold. We kind of figured that the auction was getting a little bit tired. We had a pullback yesterday. losing 3,200 estimated. It's a guess by the exchange as to how many contracts we lost yesterday in gold. 3,200 profit-taking long liquidation event yesterday. Volume and open interest, however, were both lower. We didn't increase volume on this push to the downside. We lost open interest. That doesn't tell me that we're starting this new downside auction with much health to it. Doesn't mean it can't continue and grow strength along the way. Looking at yesterday's low as pivotal, as a kind of possible extreme of an area of balance that's being created here. So yesterday's low, 1756.60. Take a look at the 30. Barcoding. That's what my brother Mortimer calls this, barcoding. You've just got price bar overlap over price bar overlap over price bar overlap. No gap, no overnight inventory, inside balance, inside value, patience. There's no runs, no hits, no errors, nobody left, no score. I ain't looking at this market today unless something happens. I mean, yesterday we did check out and trade to a week structure down here in this unfinished, in this unchecked gap. Okay, this gap goes back to here. Well, we went right to it and turned around. But this looks like an absolute nightmare to me. I'm not going to be playing this market today. Which, that said, you better keep an eye on it. The markets love to make a liar out of me. Euro, volume dropped. Open interest, moot. I mean, completely inert, losing just around 100 in open interest yesterday. It seems this market is awaiting news. And whatever happened at 2 o'clock, 2:30 last night affected every other market except this one. Doesn't seem to make sense. We're kind of creating a triangle pattern here, which may offer us some opportunity if we do break out of it. Take a look at the 30-minute chart. Here's our kind of triangle. But again, I mean, it's very similar to gold here. We've got just kind of barcoding, no real overnight inventory, no directional activity from the overnight. The 2 o'clock, 2:30 announcement, whatever it was, didn't affect this market. I'm going to really try now, because as the market kind of closes in on itself, I'm going to be having more opportunity, I think, at these extremes of this triangle pattern for better opportunities. So again, this one's kind of on the back burner, I guess, again, unless we can see some sort of test of these trend lines, particularly the lower trend line. It's the more solid. It's been revisited the most. 10-year. Okay, balance. 10-year rates haven't moved much. A lot of speculation as to what's going to happen at the FOMC in December. We have balance continuing. We lost 15,000 in open interest yesterday, which is by all kind of inert by all measurements. Volume lowering, looking for opportunities at the extremes, of course, is what I'm going to be saying. Here's the 30. Okay, we opened in range, testing into value, rejecting value. Overnight inventory was a little bit short. I think that's now been resolved. Being Friday, I'm going to focus on my main market, which is the S&Ps. Not seeing a lot of good opportunity in gold, the euro, or in the 10-year today. In natural gas. Open interest seems to indicate we trapped some longs yesterday at the high end of balance. We added a 9,200 in open interest. Now, remember, this is in rollover, so that can be largely a function of rollover that the people are legging in and they're going to leg out of the other side in the future. So we have to take that with a grain of salt. But it would indicate without rollover that we have some trapped longs up at the high end of balance here. Volume has maintained during rollover in the front month. That's interesting. That's good. So here's where we ended up, I think, losing some of our or gaining some of our open interest yesterday because we had a somewhat directional move. Okay, we had delta negative while price moved higher. Okay, so there's some longer time frame traders that I think tried to push this market into the gap that creates the island top up here. They were unable to do so, and I fear that they're a little bit stuck long and may need to adjust those inventories back to where they were. Yeah, the day before. We've opened with a gap. We have overnight inventory that's short. That overnight inventory could actually be some of those longer time frame traders trying to get out of those longs that they accumulated yesterday before the open. And we're really centrally located now inside the area of balance, so try and be careful. I'm kind of afraid of that market. Okay. Let's go, a little GTO. Yeah, I used to crank that in my GTO. The class on psychology and trading was... Well, the class with Jared Tendler was on Wednesday. It's on our YouTube channel. If you go to our YouTube channel, and I think you can go to live. It's the group coaching. It was a really good session, I thought. A lot of good reviews on it. So check out our YouTube channel. Achilles, chart settings. My volume profile on the 30-minute doesn't look like yours, and sometimes I have different POCs. So it depends on the market that you're looking at, assuming it's the S&Ps. I stop my volume profiles at 3 o'clock. So the end of the 230 bar, these shut off. And that can change your points of control because you're going to be adding more volume in the time after the cash close. So there it is. I just added one 30-minute bar and the point of control went from here to here. Why do I stop it at 3 o'clock when the market trades all the way to 4 o'clock? Isn't there good information there? Sometimes there is. Oh, shoot. Here. So I didn't have the charts on. So Achilles and the S&Ps, 8:30 is the central time open. 3 p.m. Central is the cash close in New York. That's when the stock market closes. That's when you can see the volume drops here in the S&Ps. But here's why you're getting possibly a different point of control. If I just add this next bar, watch the point of control. The green line goes from here to here. Okay, now, does it make a difference? That's the end of the day. But if you come back to recheck that level, it's going to make a difference, right? So cash close is when I stop my market profile and my volume profiles. Because the volume is pretty much done. The period of time where all of the available traders of the available participants are in the market expires at 3 o'clock, if you ask me. Now, sometimes, again, there can be some good information on that. All right? I hope that helps, Achilles. If you're trading a different market, crude oil opens at 8 Central, closes at 1:30. So I stop my profile at the 1 o'clock bar. The end of the 1 o'clock bar is the close for crude oil. Currencies, 7:20 to 2 Central Time. Gold, 7:20 to 12:30 Central Time. Anyone in exchange to be left out of the, well, interesting speculation. Joe, thanks for your ideas here. The call wall. You got it up at 4,000. Thank you for letting me know. Thank you for letting us know. Pre-market hypo assists me in my focus for the day. Absolutely. Everybody should have several, I think, hypotheses, I try and have 3 hypotheses for each market that I'm thinking about trading for the day, because if one of those hypotheses, if my main hypothesis proves wrong, what do I do then? If I'm prepared with a hypothesis for if that happens, I feel much more prepared to continue to look for opportunities. Yeah, Caesar saying group coaching with Jared was awesome. Even interviewed poker players before, yes. Sarah Hall, U.S., everybody have a great trading day. Okay, so this is a factory hood scoop from a 1966 Pontiac GTO. I had this car, and it was my favorite car ever. I did actually sell it because I was moving down to the city and I didn't want it to sit on the street, and I didn't want to store it. So I sold it to a couple of guys that from Milwaukee that loved the car and did a total rehab on the whole thing. It's a beautiful car, and I'm glad they got it. I wish I still had it, but the story behind that is I blew a head gasket. So I took the hood off, took the heads off, replaced the head gasket, got it running, and the hood hinges were really weak. So when I took the hood off, I took those off. I was going to get new hood hinges, and it didn't have the standard closing latch. It had the 2 pins that went through the hood, and then you stuck the pins in. Well, I put the hood on, never stuck the pins in, drove off, and when I got to Dundee Road and got up to about 45 miles an hour, the hood went, whoop! When I'm looking in the rear view mirror, it went over the car behind me and landed on the street like this. What a nightmare. So I pick it up, I'm walking down the middle of Dundee Road, and a friend of mine, Ray Reese, he had a beautiful 1964 Impala, white. It was a beautiful car. He's like, what did you do? I was like, I just said, get away from me. So I, put the hood back in the car, and I limp back home, and I take it to a body shop, and they're like, well, there's really not much we can do. I mean, this is sheet metal. We're not going to be able to bend this thing back perfect so that it sits. So I took the hood scoop and had to find a new hood, and I've kept that hood scoop as a reminder. Make sure, yeah, right. Make sure you got everything sewn up before you get in your car and drive. Inspire the scene in Tommy Boy. What'd you do? That GTX was beautiful too. Oh my goodness, what did they do to that thing? So that's the story of the hood scoop from the GTO. I like it there because, again, it reminds me to stay humble. Everybody makes mistakes. We just have to get a new hood and move on. So let's take our deep breath. Stay humble, grateful, and creative in your trading today. Capital preservation, don't forget. Just make a little dough and call it a day. And we'll see you on Monday morning, 7:45 usual time. Don't forget, next week is the Thanksgiving holiday in the U.S. We will be doing things as normal through Wednesday, and then that's it for the week. Thursday and Friday, we're all off. And I suggest you take some time off, too. So I'll see you in the proverbial pit here in just a couple of minutes. Trade well today, and I'm looking forward to a nice restful weekend and another challenging yet short week next week. Trade well today.